Welcome to Big Business This Week. I'm JD Durkin here on the trading floor of the New York Stock Exchange. Lots of news in the world of business and the broader markets to dig into this week. Big news out of OpenAI and AMD, plus Tesla announcing new pricing, and of course, gold continuing to hit new all-time highs. Here to break it all down this week is Stephen Dickens. Stephen is CEO at Hyperframe Research. Welcome to Big Business This Week. Great to have you on the show, Stephen. Thank you. Looks as if today's market, we do have a bit of a pullback today, but for the most part, this will be 8 out of 9 sessions in positive territory. A lot of those finishes as of late have been all-time highs for the broader equity market. Stephen, what have you been seeing as you look out in the current markets here in the early days of Q4?
So I think we're at an inflection point. I see this as we're 2 years into a mega cycle when it comes to AI. The AI trend is obviously underpinning a lot of the big Mag 7 and wider stocks that we see. So I think if I look at it from the underpinning technology, the phrase I've been using of late is that we're in the first innings of a 7-game World Series. So we're still so early. ChatGPT launched just only a couple of years ago. The way I look at this is a mega trend, like you could look at something like the public cloud. AWS has been at that now for 18 years. You look at where we are with the internet from what we saw from 99 through. You look at where we are with mobile technology, starting with the iPhone in 2007. I think we're at the sort of early stages of an overall mega trend. So we haven't got to winners and losers yet. Obviously, we've seen the likes of NVIDIA and others like Broadcom. We've seen it underpin some of the hyperscalers and some of the names like Meta, who've just been on a run for the last year. But I still don't think we've seen winners and losers. We're going to talk a little bit about AMD and how they're sort of part of it. We're going to talk about some of the other names like IBM and Oracle. So I think there's lots to see here yet. And whilst we're starting to see early indicators about winners and losers, the game's not over yet.
I still have you on that topic. I wonder what you've made more broadly of the resilience of the market here in 2025, Stephen. The S&P 500 is up about 40% off of its April 7th lows. If we go back to where we were right after Liberation Day, all the concern, all of the fear, the spike in the VIX, the doomsayers who didn't know how this thing would play out, it seems like a far distant memory with a market that has proven so resilient in the months since. What have you made of the pop in equities we've had off those April 7th lows?
So I think for me, it's a couple of things. We're starting to see huge capex spend from some of the big 4 or 5 players. Whilst we're seeing capex spend and that circular AI economy, we'll talk a little bit about AMD and OpenAI and the kind of money that's circulating around as OpenAI looks to spend what I would estimate in the 800 billion range on infrastructure over the next 10 years, which is just eye-watering numbers. That's going to trickle through. Obviously, NVIDIA and AMD are going to see a lot of that from GPUs, but we're also seeing that flow down into things like Stargate. So I think that's underpinning the tech sector. The S&P 500 is obviously highly concentrated from a perspective around valuations with regard to those mega cap stocks. So I think that's something to sort of focus on. I think the other thing I would say is, when you then look at how AI is underpinning the rest of the stock, the rest of the S&P 500, it's also providing some of those gains from a ability for those big non-mega caps to just drive productivity. We're seeing AI sort of improve productivity. We're seeing that developers unlocking a cheat code of 30%. When you put that against the macro, and we've got a lot more stability coming out of the Trump administration than we did have around the time for tariffs and Liberation Day, as you mentioned, I think when you put those things together, bit of market stability on the macro, and then you look at where the underlying tech is, that's why we're seeing the market react the way it has.
Stephen, I know you just came from an IBM event. Anthropic certainly top of mind. Give me your takeaway from what you've seen recently from a few of those names and how you feel what you learned fits into your broader AI trade thesis that is so crucial to the underpinning of the health of these markets in 2025?
Yeah, so I was out with IBM. They had a huge tech practitioner conference. 10,000 of their biggest customers out for the week with those guys diving in deep in the tech. They announced their own DPU, so they're getting into this space. That's going to ship this quarter, so that's going to underpin some of their mainframe technology and some of their other server lines like Power. They also announced and inked a deal with Anthropic. So I think if you look at IBM, they also announced their Granite 4 model the week before the conference. So IBM's been on a tear. They reached all-time highs. The stock ticked over 300 this week. The company is really putting a position. This is a company that's over, I think, 115 years old. This is a storied company that's gone through multiple transformations. But you look at where they are, they're becoming that trusted partner for enterprise AI. I'm going to be out at Oracle next week, hopefully spending some time with Clay, the new CEO, who's really making Oracle Cloud Infrastructure a key part of this infrastructure play and the build out. They're a huge player in the Stargate world, working with OpenAI as well. So I think we're starting to see some of the fundamentals of these storied companies like Oracle, like IBM, really find their place in the AI trade and become those trusted partners. This is a data play fundamentally, and customers trust their data to some of these storied companies and have done for decades.
Stephen, what do you see and what do you like in the broader Oracle story? The stock has had a wild run over just the last 6 weeks or so. The stock is now up 77% year to date, having a strong day here on Wall Street, up 3.5, at least when you and I are recording the conversation. What do you see and what do you like out of Oracle?
So I think there's a number of factors here. Larry Ellison, been in this industry for decades, still at the helm from a CTO perspective and chair of Oracle. And his vision and both his connections with the likes of Elon and the administration and some of the other players, he's still able to roll with that crew. Then you look at the solid leadership. They've just announced Safra moving and two new CEOs coming on. That solid executive transition. Then you look at what the company's doing at a technology layer with data sovereignty. That is crucial for customers. They want to know that their data, their PII personal information, their customer records, their patient records with the stuff that they do with Cerner, that most mission critical data isn't getting moved to a public cloud or moved into a large language model, and they're opening themselves up for security concerns. Oracle has probably done the best job from a data sovereignty point of view because this company was established around databases. They understand that data layer probably better than most, and that's starting to get reflected. So then you see them as part of Stargate, you see them as part of all the sort of cool kids, if you will, the newer entrants, the OpenAIs, the Anthropics, so they've kind of taken a model where they're focusing on data, they're focusing on sovereignty, they're focusing on the enterprise, whilst rolling with the cool kids and getting taken along. And that's a strong message for me.
Stephen, I'd love to get your take on the AMD OpenAI partnership as of late as well. And I wonder, when you look at a deal like that, is the goal here to reduce OpenAI's dependence on NVIDIA? I mean, NVIDIA itself has had a monster week of news, way up and to the right. And as NVIDIA goes, so too goes virtually all tech companies and therefore kind of the broader market. But for OpenAI and AMD, what does it mean to maybe establish that relationship separate from the influence of Jensen Huang?
So I mean, this is a rising tide raises all boats. I don't think this is a zero-sum game for me. So AMD inking this partnership with OpenAI shouldn't be viewed, in my opinion, as a negative against NVIDIA. I think we're going to see a rebalancing. We're going to see NVIDIA's got, I think, 97% market share in GPU. The last data I saw, it's certainly in that range directionally. If I'm not factually correct, that's unhealthy for the market when we're seeing. I just talked about OpenAI plan to make an $800 billion dollar build out over the next 10 years. That's all concentrated coming through NVIDIA into TSMC, into Taiwan. We're seeing a rebalancing of the supply chain. We're seeing Intel Foundry come through. We're seeing AMD start to make moves and that bring their GPUs on at scale. So I think this is positive. I think a rising tide raises all boats. There's still more than enough demand for NVIDIA, and I'm going to see, I expect bullish things from them going forward. And they're going to continue to innovate on their stack, which is more than just hardware with the CUDA layer. But I think AMD coming through and being a credible number two, every robust market needs at least 2 or 3 players. If you've got one player that's outsized, that doesn't force NVIDIA to continue the rapid pace of innovation that they've been on. NVIDIA and Jensen runs that company really well from an innovation point of view, but there's nothing that sharpens a blade more than competition. So I think AMD starting to sort of come into this space and step up is just good all round for all the players. It's good for everybody from an infrastructure point of view. It's good for the hyperscalers. It's good for
Mhm.
NVIDIA ultimately. I mean, obviously NVIDIA would like 100% market share, but I don't think that's healthy. And I think if you got Jensen in a private moment, I think you'd be happy that Lisa and the AMD team are stepping up and taking their part in this marketplace.
Yeah, I mean, lots of analysts on Wall Street giving Lisa Su her due for leadership over at AMD and a lot of these exciting announcements. You talk about the competition being a good thing, but I can't help but think, Stephen, the rules of the road by which the competition is allowed to compete is being rewritten in real time by new regulatory forces in Washington, a new administration that has prioritized these relationships, and in many ways, I would argue, helped ease the pathways for a lot of these companies to now be able to be in that arena and to be able to compete. What is the Donald Trump factor in all this, where we know that these CEOs, many of them, have to make these trips to the White House? They have to, and many times, at least they appear to publicly, they show deference to the president. They show deep gratitude to the president. This is as much a marketing, a PR, a showmanship component of working hand in glove with this administration and trying to give them credit for allowing these sorts of relationships to unfold, but also comes at the same time where today is day 9 of an ongoing federal government shutdown. What is the DC political influence on the success or failure of all of these companies?
So I think I won't touch too closely on the political side of this, but what I would say is I think the administration wants to see the US based tech stack, if you will, get supremacy as the world decides where it goes for AI. There's an existential crisis. Is it going to be Huawei? Is it going to be DeepSeek? Is it going to be Alibaba? Is it going to be Tencent? The Chinese tech stack, if you will, versus the US tech stack. We don't see Europe with a big technology player in the top 20 of the mega caps. The biggest technology company out of Europe is SAP. You've got Spotify based out of, the Nordics, but really it's SAP from an infrastructure and enterprise layer. So I think if you look at the administration's lens, and I think one person who's doing a good job here, park his politics, but it's David Sachs. David Sachs is the AI czar. He knows this sector, whether you agree with him politically, and we can go there and we can debate that over a beer sometime. But I think when you look at the understanding of the tech and getting the regulators out of the way, what we need to do is have a US based regulatory framework, not a 50 state based framework that enables the US tech sector to fight for supremacy against that Chinese tech sector. Whether the Trump administration's got a particular style on the way it does that, and the Chinese Communist Party's got a style in the way it does that. But I think when you strip away the politics, we're in that existential fight for how do we ensure that the US gets supremacy as the world decides its AI stack that's going to power the
Sure.
next 20 or 30 years.
Steven, I'll tell you what, I'll grab that beer with you anytime, though I think we can safely talk about things more interesting than the politics of David Sachs over that beer. So we'll
Yeah,
align that offline.
for sure.
Yeah, but something that is interesting, And I wonder if you have any thoughts on it. Tesla's standard pricing. Obviously, this is a wildly volatile stock. It is still considered one of the Mag 7, but it is oftentimes in its own category, given that a lot of people still view Tesla's stock performance as a bit of a real-time proxy on Elon Musk's own personal support. But they're moving towards more of a standardized global pricing model for its vehicles. You have any thoughts on that? That's a favorite, fan favorite, consumer-facing brand in the discretionary category.
So I think for me, it fundamentally comes to see whether you see Tesla as a car company, an automotive company, and you put them in the market against the likes of Stellantis, against Ford, and whether you look at their valuation that way, or whether you look at them purely as a tech stock with what they're doing with AI, with autonomous, with robots. The way I look at it is, if you could put 6 million sort of devices on the road with 8 cameras on each and get them to drive around and do thousands and thousands of miles every year and capture that data and then bring that back into a tech stack, that's valuable. So I think if you look at, and that's how I look at Tesla, as kind of Elon has obviously proven across multiple companies that he knows what he's doing from driving innovation and deep, hard sort of problems. I wish he'd look at LiDAR rather than just relying on cameras, but that's just a personal perspective. I think he needs to balance there. But I think if you look at Tesla just overall, I think standardizing their vehicles, there's a refresh that they need to do. So I think if you look at the core business, they're bringing out cheaper models. There's rumors that are underpinning the stock about a new, cheaper model. That's going to be foundational. The target price, I think their range starts in the mid to high 30s. Chinese providers like BYD are able to get down into this at 25s, 20K range. So I think as we look globally at competition, people like BYD are starting to get share, primarily in Europe and other markets, not in the US yet. And the Trump administration's shielding US players a little bit from the threat of BYD. But I think if you look overall, Tesla's as an automotive company's got some work to do. There's a model refresh that needs to happen. The pricing piece is good to see. They've got to get to autonomous. Waymo is doing a great job. I took my first Waymo in Atlanta the other week. Fantastic experience. Though there's now thousands of miles and hundreds of thousands of miles under the wheels of Waymo, they've got to deliver. And I think as Elon moves back from politics and moves back into Tesla, that's how a lot of people are looking at that stock and saying, if he can put his effort into Tesla over the next 2 years, that's going to be bullish for the stock.
And many investors are hoping he somewhat leaves his political leanings behind and refocuses back on the company. Before we go, I have to ask you about this gold price per ounce as you and I are recording this interview. $4,026.56. What has driven gold to these all-time highs as of late, Stephen?
So I think for me, this is a flight to safety. We're seeing this with Bitcoin. A lot of people see that as digital gold. I think people look at market volatility. They look at the AI trade. Probably on one part of their portfolio, they're making out with that Mag 7 trade. You also names like Broadcom and Oracle that we talked about, IBM, all hitting all-time highs. And then people are thinking portfolio matrix, portfolio management, where's a bit of safety? And then you're seeing the dollar go down, which we've seen this year, debt, bonds, all the other parts of the market, which the equities guys do a better job and sort of the markets traders do a better job of commenting on than me. But if I look at it, I think you've got lots of positivity over on the AI trade, which is where I spend my time. But also there's people have got to balance risk in their portfolio. So you look at Bitcoin and gold on the other side of that equation, I think it makes sense. I certainly don't give stock advice to anybody. I just look at the underpinnings of the tech, but it makes sense to me to be able to see people having safety in their portfolio alongside an explosion on what's going on that AI trade side of the equation.
And Bitcoin, of course, also hitting those all-time highs of 125 earlier this week. Fascinating look at everything going on more broadly with the economy and the markets. We'll have to do it again. I could continue the conversation for much longer, but unfortunately, Stephen, That's all the time we have this week. Stephen Dickens is CEO at Hyperframe Research. Very grateful for your time, my friend. Come back anytime. We'll talk to you again soon.